Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Nasdaq and S&P 500, more specifically the ETFs SPY and QQQ. I'm going to go over the economic calendar, 10-year treasury, and crude oil. And then one thing to note for tomorrow, because it's quite important, is at 2 p.m. we have minutes of Fed May FOMC meeting, so do keep that in mind. So I'm going to go over the economic calendar first, and then the 10-year treasury, crude oil, and then go over the analysis. And then always, I'm not a professional, so please do your own due diligence and research before buying and selling. Now for today, we have 9 a.m. Fed Gov Christopher Waller speak. At 9:05 a.m., we have New York Fed President John Williams opening remarks. And at 11:45 a.m., we have Fed Vice Chair for Supervision Michael Bear speak. Now at 7 p.m. later on today, we have Cleveland Fed President Loretta Mezert and Atlanta Fed President Raphael Bostic and Boston Fed President Suzanne Colin speak together on panel. And again, like I stated, tomorrow, 2 p.m., minutes of Fed May FOMC meeting. So regards in terms of interest rate. Now, the thing is, though, towards the end of the day, I think for the most part today, it's not going to be much movement overall in terms of high and low volatility. But towards the end of the day, either it's going to close flat or to the low side, just because for anticipation for hypothetically tomorrow. It's not really crazy day tomorrow, potentially. But because I think for the most part, the market is aware that the narrative is going to be the same as it has been for the past, let's say, for example, month and a half, 2 months, where it's just pretty much neutral. And the Fed just keeps on stating that they seem optimistic a little bit in terms of how things are moving in terms of progress. But for the most part, staying neutral, saying that they will cut interest rates when the data shows, like, the data, they're assessing everything based off the data. And when the data comes in, then they'll make a decision. And then Jerome Powell stated twice already that it's more likely that the interest rate, when it comes to the interest rate decision, will be to the downside rather than the upside. But that's more of his opinion kind of thing. So there's that. Now, in terms of the markets, I'm going to go over the QQQ first, which is the Nasdaq, and then I'm going to go over the SPY right after, which is the S&P 500. So now, in terms of the 5-year chart, just in case for the new viewers who just showed up to the channel, upward trend resistance line, upward trend support level, channel dating back since 2010, broke through since 2020 to 2022, but then came back down, got knocked down underneath the resistance line. The reason why I show this is because in terms of going to the upside, we still have room to grow to the upside. When I checked, it was about, right now we closed $454.91. Pre-market is a little bit down, but to go to that high level, it moves, so the longer we take, the higher the high will be, but it's showing around $464 to reach that upward limit. And then potentially could get knocked down or could break through it like we did in 2020 to 2022. The SPY/S&P 500 shows the same channel basically since 2010. Not the exact same, but it never broke through. But there's a lot more room to the upside. And because of that, I think potentially the Nasdaq could potentially just break through again, potentially. Now, to get to the 5-year and 1-year chart, they're showing upward trend/bullish movement overall, potentially. So for the 5-year, yeah, it is in the bearish, but it's trying to arch to the positive, so bullish run based off the MAC line. Again, it's not a guarantee it would. There's times that it's falsely looks like it's about to, but it doesn't. But then in the 1 year, it's bullish. So in terms of long term, more of the reason I think it's going to be it's the upward trend. But now for the short term, 6 month, 3 month, and 1 month all show for the Nasdaq, not for the S&P. The S&P is a little bit different. They're showing downward trend, downward movement in terms of MACD line. So in the bearish movement, more of the reason why I think it's going to be potentially stagnant today, because Nasdaq and S&P is a little bit mixed signals, a little bit. So I think it's pretty much going to be flat, and then I'm going to show through the levels of what potentially could happen. So in my opinion, I think if we were to move to the upside, I think pretty much we're going to be flat at 456. I don't think we're going to go past 456, going for an all-time high, past the all-time high kind of thing. But if you think you're very optimistic we're going to reach the 2010 today somehow, again, that is for $464. Now more, I think we're going to be bouncing off this moving average like we have for the past 2 days basically, and that's around the $453, $452 price point. And then if you think it's going to get worse, we could ultimately get to the 451, 450, but I think most likely bounce off the moving average, which is the $449 and some change. Now, if you think it's going to get worse, which I don't think it will personally, just because I think the market already knows what the Fed is basically thinking, but we could potentially hit this upward trend support/resistance line, which we saw touch points here, and then there was resistance touch point here and support right here. So resistance right here, yeah, false breakouts, not perfect, but in essence around the ballpark. And then we hovered around it right here. So if we were to drop down to it, let's say today, you're looking at $447, give or take. And then it coincides with horizontal resistance / support potentially, which is about, 446. So 447, 446. And then this moving average, just in case, which I don't think we're going to get to, but 444, which I know we have support at 445 as well. So 444, 445. That's the movements. Now for the S&P 500, specifically looking at the SPY, same thing just in case for the new viewers, dating back since 2010, right about here, channel upward trend resistance line, support, and then we're within this channel. Now we have a lot of room to go to the upside. It's quite a bit. It's somewhere in the 600 range. We close at 530 and 60 cents, and then pre-market's for $529.80. But in terms of 5-year and 1 year, shows the same thing as Nasdaq, basically bearish for the 5-year, but crossing over to bullish. 1 year is bullish, and there's more room to grow again, like I stated. But then the 6 month and the 3 month, they are in the bearish movement, but the 1 month is in the bullish movement. So potentially showing that it might, more the reason why I think early part of the day potentially could be going up a little bit. But then by the end of the day, in my opinion, because of the FOMC meeting tomorrow at 2 p.m., I think the markets might be going a little bit down towards the end of the day. Again, nothing drastic, because I think the market is already aware of the narrative of the Fed, what they're expecting. And the narrative, for the most part, seems like the market's expecting 1 interest rate cut within this year. I personally think the Fed doesn't want to. I think they want to prolong it as much as possible, which they're pretty much stating that anyway. But to satisfy the market, it'd be good that if they cut the interest rate once this year, hypothetically, but technically it almost doesn't matter. They should be going towards their goals, which is 2% inflation, even though technically the inflation numbers are not perfect, right? But either way, they're trying to get to 2% inflation, and to do that, interest rates are not really needed. But at the same time, the market wants 1. So the narrative is they're waiting until the data comes, and the market's aware of that technically, so it creates delay. But they haven't eliminated the fact that they're not going to cut interest rates. And because Jerome Powell, like I stated that in his opinion, the next rate move will be to the downside rather than to the upside. But yeah, in terms of the overall price points, so we have this upward trend resistance line that we pretty much have been knocked down 1, 2, 3 times, technically 4 if you want to count that one. But we're pretty much hovering around it. And with the moving average, pretty much staying around it for the most part too. So in my opinion, if we were to go up today, I think for the beginning part of the day, we're going to be hitting about $432. And then when I checked it too, if you zoom in and all stuff and go along this upward trend resistance line, it closes at $532 and some change. But the thing is though, I think by the end of the day, I don't think it's going to be going up to that upside, but I think that'd be the high side hypothetically. More likely it's going to close closer to this moving average in my opinion, which is $530 give or take, around there. So $529 and some change potentially, or $530 and some change. So essentially closing pretty much where we closed the other day. Now if you think it's going to be doom and gloom and go head down to the downside, I think most likely this moving average right here will be the ballpark where we'll close at. If you think it's not doom and gloom, but it's not really great, it's around $527 and some change, maybe $526 and some change. And then the doom and gloom would be more closer to this moving average. But we do have support and resistance at the 522, 523. And then right about here is the 521 and some change for the moving average. I do not think we're going to go lower than that personally, just because I think the market's already aware of the narrative of the Fed. So I don't think there's any surprise coming personally. But yeah, that's basically it for today's video. Thanks again for watching. Appreciate it. And I'll see you guys in the next video. Take care. Peace.